Hey folks, H2 here, and you're on the F3 channel. Hey, I know you're tracking the activity that's occurring out there on Wall Street, and I just thought I'd get back on the channel here today and maybe chat with all those that are investors in Wall Street or got their wealth tied up in the stock market. And so, as you know, the Dow is at record heights now. Actually, the Dow, the S&P, and the NASDAQ are reaching new heights every day. And while that is something to be happy about, particularly if you have many or a significant amount of your assets tied up into securities, you're probably in the happy camp. But I just like to offer up a lesson I learned many years ago in the .com area. That was back in the area where the internet was the business in internet was just coming online, and new companies were getting started, and companies were being listed out there on the NASDAQ. Never made any money, but they were out there and you could buy those stock. And as as I would see those prices go up and up and up, it was almost like you couldn't lose. So if a new company came online, you just stuck some money in it and just watched the stock go up. And those were good times, and certainly made a lot of money, lost a lot of money, and at the end of the day, that was a $250,000 loss in 1 year. And so you can't cry over spilled milk, but oh boy, I'd sure like to have some of that milk right now today. But that was a $250,000 lesson. And so I'd rather you not have to learn that lesson at that particular cost, but so you might want to take heed in what I'm trying to tell you. So the market, again, it's been going up, but there's talk of a correction. And so one might have to ask themselves, when is the market going to correct? And should I get in now or should I wait? And no one has a crystal ball, and no one can predict, on the day that the market is going to, go up or the market is going to go down. It's kind of a crapshoot if you ask me. But there's some lessons to be learned, and that is balance your portfolio across all your asset classes. And what I mean by that is whether you have equities, both U.S. equities or international equities, cash and real estate and metals, if you are trading in metals. But all of the various asset classes, you got to make sure you keep that in balance. So don't do like I did, had all my eggs in one basket, and when the basket got turned over, I was left with eggs, with egg on my face. The last point I want to make here is, if you are contemplating entering the market at this particular point, so let's just assume you had, $10,000 and you wanted to get into the market. Well, so while we don't know when the market is going to turn, if it's going to turn, if it's going to continue to go up, what you want to do is get into the market gradually. Don't just dump all of your money into the market at one time, because that's risky in doing that. So break it up into maybe 10 pieces and enter the market gradually. That way, if the market turns sour, you can buy those assets at a cheaper rate. Okay, so that's all I got for you, and those are just some lessons from H2 back in the day, playing in the stock market. I just want you to be an informed investor. Okay, hey, that's all I got for you. Thanks for joining us. H2 signing off.